Have you ever found yourself looking at a company, you know, one making serious waves in the financial world? It generates a ton of buzz, but you just know there's a much deeper story beneath the
Oh,
surface?
absolutely.
Yeah,
Especially in fintech, right?
yeah,
So many strong opinions, often going in completely different directions.
exactly. And today, we're really going to dig into one of those. Webull Corporation, they feel like they're at a real turning point.
You really do. A significant player. And yeah, they seem to be at this kind of pivotal moment. Some dramatic financial shifts recently, and they're definitely trying to carve out their own space. It's competitive out there.
It is, and it's this intriguing mix, isn't it? Big risks, but also, well, potentially some very compelling rewards for anyone trying to figure them out.
Uh-huh.
So our mission today is to unpack all of that. We're going to dive into Webull's recent Q1 2025 financials, look at their strategic roadmap, especially what's critical for Q2 2025, put them head-to-head with competitors like Robinhood, and really dissect the risks and potential rewards.
Right. The goal is to help you, the listener, get a handle on what to look for with Webull's upcoming Q2 2025 earnings report. That's coming up soon, August 28th, just, 15 days from today?
Just around the corner. So as we look towards that Q2 report, the big question we need to ask is Webull really just, a poor man's Robinhood, like some people say?
Or is there something more complex, more nuanced going on? A story for investors and, frankly, anyone just curious about the space. It's definitely not simple.
No, not at all. And that complexity is fascinating. Let's start with that operational pivot you mentioned. Looking at their Q1 numbers reported back on May 22nd. It's just such a dramatic shift from before. Real turnaround stuff.
A huge shift, yeah. Total revenue surged 32% year over year, hitting $117.4 million. Impressive growth. And a big chunk of that, over half, was from a 52% jump in trading-related revenue.
Okay, strong top line, but what about the profit? That's the key, right?
Yeah.
Especially looking towards Q2.
Exactly. And this is what really grabs you. They actually achieved GAAP net income of $13.1 million. Now, GAAP, that's generally accepted accounting principles, the standard rules.
Right.
So $13.1 million profit, that's a massive swing, like $25.5 million better than the $12.4 million loss they had in Q1 last year. That's a significant leap into the black.
Okay, wow. So the big question then is how? How did they pull off such a fast, significant turnaround? Is it just, I don't know, some accounting trick, or is there something more fundamental happening that you should be watching for in this upcoming Q2 report?
That's the right question. And it looks like more than just a one-off good quarter. It really suggests operating leverage kicking in hard.
Operating leverage meaning what exactly for the listeners?
It means their revenue is growing much, much faster than their costs. It signals that their basic fixed costs are pretty much covered now. So any new money coming in, more of it flows straight down to the bottom line as profit.
Oh, okay.
And what's really telling is that while revenue shot up 32%, their adjusted operating expenses barely moved. They only increased like 2.4% year over year to $88.7 million.
So expenses stayed almost flat while revenues soared. Does that mean the platform is basically built out? It's scaled?
Seems like it.
But does that imply they've maybe cut corners somewhere else? Like maybe customer service took a hit? Or are they just genuinely that efficient now?
It's a fair point, and we'll touch on user sentiment a bit later.
Yeah.
But looking purely at the expense side, it really points towards efficiency gains. They even managed to cut their marketing spend, dropped it from $33.5 million down to $22.7 million.
While still growing users.
While still maintaining user growth, yeah. That's a strong signal they're getting smarter about how they spend money, optimizing things.
Okay, that makes sense. And this growth wasn't just financial, right? They also saw more users, more assets. That's crucial for the future.
Absolutely crucial. Total registered users grew 17% year over year, up to 24.1 million. And funded accounts, the ones with actual money, increased a solid 10% to 4.7 million. And customer assets, the total money held on the platform, rose a really remarkable 45% year over year to $12.6 billion.
Yeah.
They pulled in over $1 billion in net deposits in Q1 alone.
Wow.
And $5 billion cumulatively over the last 12 months. So real momentum in attracting assets.
Those are serious numbers. But, attracting users and assets is one thing. You've got to monetize them. Right? Did the actual trading activity pick up too?
It definitely did. Equity notional volume, that's the total dollar value of trades, was up 15% year over year, $128 billion. Options contracts volume grew 8% to 121 million contracts.
Okay.
And DART's daily average revenue trades, a key metric showing how many paying trades happen each day, jumped 44% to 924,000.
Huge jump.
And what's maybe even more impressive, their revenue per trade actually went up
Hmm.
from $1.37 to $1.47. So they're not just getting more trades, they're getting slightly more value from each one.
Interesting. Any weak spots in the revenue?
It's a slight dip, really. Interest-related income was down about 4.3% year over year, mainly because interest rates on client cash and their own corporate cash were a bit lower. But even that was partly offset by more income from margin financing.
So putting it all together, Q1 paints this picture of a company successfully monetizing its growing user base and hitting strong profitability. Okay, that's Q1. But for you, the listener, the real question is, can they keep it up?
Let's look at Webull's roadmap for 2025. What's coming that you need to know about for this Q2 report? Yeah, their focus for 2025 is pretty clear. More products, new asset classes, and going global. Just to recap Q1 quickly, they launched that Webull Premium subscription.
Right, the premium service.
Yeah, apparently attracted 40,000 users and brought in $2 billion in new AUM assets under management in just 7 weeks. They also added prediction contracts with Kalshi and partnered with BlackRock on portfolio solutions.
Okay, so that sets the stage. Now, here's where it gets really interesting for that upcoming Q2 earnings report on August 28th. What were the key initiatives specifically planned for Q2 that you, our listener, should be listening for updates on?
Right, this is crucial for understanding the Q2 results. They plan to launch crypto trading in some international markets. Brazil, for instance, was slated for June 2025.
Okay, crypto expansion.
Yep. Also enabling more advanced option strategies internationally, introducing corporate bonds, expanding their fixed income beyond just treasuries, and launching a consolidated Latin America Webull app for Brazil and Mexico.
So all of those things would have started rolling out during Q2.
Exactly. They should have started contributing, even if just initially, to the Q2 results. So you want to listen closely to how they talk about the early uptake, the revenue generation from these new things.
Absolutely. So when that report drops on the 28th, we're looking for the impact of those specific Q2 moves. What about beyond Q2? Any hints about the rest of the year that suggest future growth potential?
Well, looking further out, they're talking about relaunching crypto in the U.S. that's planned for the second half of 2025. Also supporting extended trading hours for index options, launching the app in the Netherlands in Q3, and adding mutual funds by Q4.
Mutual funds, finally.
Yeah, and all of this really points towards their biggest organic growth opportunity, bridging that huge gap between their 24.1 million registered users and the, 4.7 million funded accounts.
Right, converting those signups into active users.
Exactly. All these new products, they're aimed squarely at giving those registered users more reasons to actually deposit money and start trading. It's a massive potential pipeline if they can tap into it effectively.
Which naturally brings us to that comparison everyone makes, Webull versus Robinhood. For you, the listener, trying to understand the landscape or maybe even true to platform, who kind of wins this fintech fight?
Well, first, it's important to think about who they're for. Webull often gets called a prosumer platform, right?
Yeah.
For more, let's say, sophisticated retail investors, active traders.
Whereas
Robinhood is generally seen as more for the absolute beginner, really emphasizing simplicity, ease of use.
So Webull is like the next step up for someone wanting more power tools. What are those specific strengths? What does Webull offer that appeals to that more advanced user?
It really gives you a much deeper toolkit. We're talking over 60 charting indicators, a highly customizable interface, basically more knobs and levers for someone who wants to dig into analysis. They have a really robust paper trading account, too, with like $1 million in play money to test strategies risk-free. And a big one is order types. Unlike Robinhood's pretty basic orders, Webull offers advanced conditional orders, things like OCO, one cancels the other, O2O, one triggers an OCO, one triggers the other.
So more automation for complex trades?
Exactly. Stuff that lets you set up more sophisticated trading plans, that's a major difference. Plus, they just offer more things to trade. U.S. stocks and ETFs, long and short, ADRs, options, about 500 OTC securities, futures options, commodities.
And that high yield cash thing you mentioned?
Yeah, their cash management account offers 4.1% APY for those premium users. Pretty competitive.
Okay, that sounds like a strong offering for the active trader.
Yeah.
But where does Webull fall short? Where does Robinhood still have an edge, maybe for you as a potential user?
Well, one area is definitely crypto. Webull uses a separate app, Webull Pay. It's not integrated like Robinhood's single app.
Right, I've heard that complaint.
Yeah, and Webull Pay has fewer coins available and, importantly, no external wallet functionality. You can't send your crypto off the platform to your own wallet.
That's a big limitation for serious crypto users. What else?
They also still lack traditional mutual funds, and their bond offering is pretty limited, mostly just treasury bonds and bond ETFs right now, though they are adding corporates.
And customer service, that's often a differentiator or a pain point.
It can be. There are definitely user complaints out there about slow customer service response times, especially trying to get someone on the phone. And some issues reported with fund transfers or withdrawals taking longer than expected.
What about retirement accounts, IRAs?
That's another point. Webull had that 3.5% match on IRA contributions, but it was a limited time promo that ended back in October 2024. Robinhood offers an ongoing 1% match or 3% if you have their gold subscription. So for long-term IRA contributions, Robinhood currently has that advantage.
Gotcha. And costs, are they basically the same?
Pretty much on the core stuff. Both offer commission-free stock, ETF, and options trades. Webull does charge a small fee, $0.55 per contract, on non-equity options like index options. And for crypto on Webull Pay, while there are no direct fees, they build a 100 basis point that's 1% markup into the buy-sell price.
Okay, so a hidden cost there on crypto.
Yeah, it's a spread, common practice, but something to be aware of. So both are very competitive on fees overall, but you need to know the specifics.
All right, let's shift gears to, well, the elephant in the room. The big issue hanging over Webull that really seems to impact its stock price, no matter how good the operational numbers look.
Yeah, that would be the geopolitical risk, the China connection. It's pretty consistently cited as the single biggest factor weighing on the stock.
Because the parent company.
The parent company, Hunan Fumi Information Technology, is Chinese. And a significant part of their tech development team is based in China.
And that's led to some serious official scrutiny, right? Not just internet chatter.
Oh, yeah, definitely official. The House Select Committee on the CCP raised formal concerns back in December 2024. There have been calls for an SEC investigation, even talk about potential delisting back in April 2025.
Wow.
And you see it in the stock price. It drops sharply whenever these reports surface. It shows just how sensitive the market is to this specific risk. It creates this kind of credibility discount, you could call it, that's just hard for them to shake. And it's definitely a major factor coloring perceptions ahead of this Q2 report.
So how is Webull responding? Are they just trying to ride it out, or are they actively trying to counter this pressure?
Well, what's really interesting and quite strategic was their appointment of Walter Bishop to the board back on June 8th.
Walter Bishop, who is he?
He's a heavy hitter in U.S. financial regulation and compliance. We're talking former senior roles at places like Deutsche Bank, Barclays U.S., KPMG. Yeah. Very established figure.
He's on their board now?
Yep, on their audit and governance committees, no less. This is a very clear, very deliberate signal. They're trying to show regulators and investors, hey, we're serious about playing by U.S. rules, about building credibility within the U.S. system. It's a direct attempt to address those fears about foreign influence and data security.
Will it be enough?
That's the million-dollar question, isn't it? But it's a concrete step, not just talk.
Okay. Beyond that really significant geopolitical factor, what other, maybe more typical market risks are they facing that you, the listener, should keep in mind when you see those Q2 numbers?
Well, there's always general market volatility. The S&P 500, for example, was down almost 5% in Q1 2025. That affects trading volumes and sentiment. Interest rate changes can swing their income, especially from cash balances. And the competition is just intense. You've got the huge established players like Schwab and then all the other fintechs fighting for the same active traders. Plus, regulatory hurdles are always a factor, especially as they push more into crypto internationally. That could slow things down.
And how has all this impacted their stock valuation? Q1 was strong, but has the market fully bought in?
Not really, no. Despite that strong Q1 turnaround, the stock price is still way down. It's hovering around, what, $13, $15? The 52-week high was nearly $80.
Wow, big difference.
Huge. And the average analyst price target for the next year is only around $14.50. It really shows that investors are still nervous, holding back because of those long-term profitability questions and, crucially, that geopolitical overhang. It's a classic case of external factors kind of capping the enthusiasm for strong fundamentals, at least for now.
What about the actual users? What's the vibe on places like Reddit? Are people feeling those operational improvements on the ground, or are the complaints still loud?
It's definitely mixed, as you might expect. You see plenty praise for the app itself, the ease of use, the charts, the tools, people saying it works well for both beginners and more experienced folks. But you also see those recurring negative themes. Slow fund transfers, slow withdrawals, customer service being hard to reach or unresponsive. That separate Webull Pay app for crypto, is a common gripe. Some find it too simple, lacking features.
Hmm.
And yeah, you do see some individual users complaining about trade execution problems and sometimes linking it, rightly or wrongly, to the Chinese ownership. Those are anecdotal, of course, not like official findings, but they contribute to the overall sentiment. So for you, the listener, it's about weighing those user reports against the company's reported financials.
So let's try and wrap this up. Looking ahead to that Q2 report on August 28th, what's the big picture takeaway for Webull?
It really feels like a classic high-risk, high-reward scenario. On the one hand, you absolutely have this compelling operational turnaround.
Mm.
The growth is there, the profitability in Q1 was clear, and they have this aggressive plan with new products aimed right at that sophisticated retail investor. They're executing operationally.
There's always a but here, isn't there?
There is. On the other hand, you have these huge, undeniable external challenges. Primarily the geopolitical risk tied to the Chinese ownership. It just creates this credibility discount, like we said, that seems to persist no matter how well the core business does. It puts a constant ceiling on things.
It really highlights that tension, doesn't it, between a company's own performance and these massive global forces that are just outside their control.
Exactly. It's like this high-stakes game where geopolitics can sometimes just override a great business strategy, at least in the market's perception. So for this upcoming Q2 report, you really need to assess not just the raw numbers, but also listen to the management's tone. How are they addressing these external pressures? How effective do their countermeasures, like the board appointment, seem to be?
And that really brings it back to you, the listener. As you get ready for Webull's Q2 2025 earnings report in just about 2 weeks, how do you personally weigh that clear, fundamental turnaround, that promising growth story, against these unpredictable, hard-to-quantify geopolitical risks and just the general chaos of market speculation?
Yeah, can things like strategic board appointments and solid operational execution truly overcome these really deep-seated external pressures and perceptions?
It's a dynamic we see playing out elsewhere too, but it's so stark with Webull, a powerful reminder really of how these broader global forces can dramatically shape the narrative and the valuation long after the quarterly numbers are released. Something to really think about.